Now, over the last 3 or so years, I've been loading up on a ton of shares of the JP Morgan Equity Premium Income ETF, known as ticker symbol JEPI. So much so to the point to where, as of filming this video right now, I'm currently holding well over 1,000 shares. And just for some transparency, here's a screenshot from a few of my larger portfolios where I hold a boatload of JEPI. Now in this video, we're going to go over the JP Morgan Premium Income ETF, explain how this ETF works and why I even bought it in the first place. Then towards the end of the video, I'm going to show you exactly how much I earn from JEPI ETF alone on a monthly basis and show you the actual dividends I was paid over the last few years. Now, if you currently hold JEPI or have ever thought about holding it, make sure to stick around because this is going to be extremely useful to you. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, before we go into my actual holdings and the dividends and everything else, heading over to the JP Morgan website, it says JP Morgan Equity Premium Income ETF. And the overview for JEPI is pretty simple. It says JP Morgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity market exposure with less volatility, which was one of the main reasons on why I bought into JEPI in the first place. It seemed like an ETF that had a pretty bulletproof strategy, which we're going to go through here in a second what it is, and an ETF that had the potential to distribute much larger dividends than most other stocks or ETFs across the market. It then says portfolio managers with over 60 years of combined experience investing in equities and equity derivatives. So the managers at JEPI are going to have tons of experience when it comes to buying stocks and of course options. It says portfolio defensive equity portfolio employs a time-tested bottom-up fundamental research process with stock selection based on proprietary risk-adjusted stock rankings. Disciplined option overlay implements written out of the money S&P 500 index call options to generate distributable monthly income. Now, if you've been investing for a while now, especially if you're a long-term investor, I'm sure you've heard about selling covered calls and call options, which I use throughout my portfolios. It's an extremely easy way to earn extra income and to protect against some downside movements. So basically the way that JEPI works is it buys a basket of holdings, which we're going to go through here in a second, and then utilizes a covered call option to earn premium, which they then distribute in the form of dividends to investors like you and I, but also with the option overlay, it's going to protect against some downside. Now, I think it's also important to note that JEPI does have a 0.35% expense ratio, which is much higher than most of the other long-term buy and hold ETFs out there. Something like VU or SCHD, of course, have a much lower expense ratio, but keep in mind for an ETF that's as actively managed as this one, it doesn't seem too unfair. Now, JEPI's portfolio as it sits right now has 133 holdings in it, and keep in mind this portfolio is going to change in and out throughout the year. But as of right now, some of the largest holdings are things like Amazon, Microsoft, Progressive, a lot of blue chip tried and true stocks, which although most of these names are a little bit higher beta, with the option covered call overlay, they're going to most likely stay at bay within reason. Now, looking at JEPI's price performance, on the max time frame, the JEPI ETF is up 7.28%. Now, I know you're saying over around 3.5 years now, that's not all that impressive, but keep in mind, with covered call ETFs, a lot of times, they don't really see as much upside, and they do see a little bit more downside, depending on how the market trades within given time frames, and we can go more into that in different videos if you guys would like. And although JEPI has traded mostly sideways over the past 3 or so years that I've held on a JEPI, considering my average cost basis across all my portfolios is basically right where it's trading right now. I own JEPI for an average cost of around $55 or $55.50 per share, depending on the portfolio. But even though JEPI hasn't really grown in price all that much, and even though there's been much better investment opportunities within this time frame, for a sort of scaredy cat low beta investor like myself, it's paid a nice monthly dividend for the most part every single month since I bought into it years ago. Now, speaking of JEPI's dividends, it currently has an 8.43% trailing 12-month dividend yield. So some of you might be watching this and hearing me say that and say, I thought JEPI had a much larger dividend. And the truth of the matter is that it did used to have a much larger dividend. Throughout times in JEPI's past, the dividend yield has even been well above 10% trailing 12 months, but as of recently, we've seen as low of a payout back in July of 29 cents on a monthly basis to now, luckily enough, back up to 43 cents, which isn't all that bad. But keep in mind, because of JEPI's strategy and because the way this ETF really works, it's going to pay a different amount on an ongoing basis. So if you're looking for an investment for a stock or ETF that you can sort of count on, more or less, an ongoing payment every single month, this might not be the right ETF for you, but for those investors that are looking to generate a little bit more cash flow on an ongoing basis, for the most part at least, JEPI has been able to do so, paying dividends even upwards above 60 cents on a monthly basis. Now to get to the fun part, looking at some of the dividends that I was paid throughout the last year when it comes to JEPI. And keep in mind, side note, I do own JEPI through multiple portfolios. I have portfolios in different platforms, different brokers, but this one broker right here, back in 2023, my around 600 or 700 shares of JEPI in this portfolio paid me $315 in the month of January. Then in February, I got paid $283 on a monthly basis. Now keep in mind, I didn't buy or sell any shares. It's because JEPI pays a different amount every month. So some months might be as high as $300 in this portfolio, and some months might even be below $200. So like I said, owning JEPI might not be the perfect option for those investors that need to have reliable, consistent cash flow. But for me, it's honestly worked pretty good so far. Then last year, back in March and April, $268 and $297. Then back in May and June, $283 and $245. Then from July on, we got $241, $194, $226, $243, $240, and $216. Now, because I currently own around more or less 1,200 or maybe 1,300 shares of JEPI, I'm not exactly sure, throughout all my portfolios, I think altogether on a monthly basis, I'm earning anywhere from around $350 a month to around $450 a month, again, depending on what JEPI pays from the monthly dividend in that time frame. And like I said a second ago, although there has been much better investment options within that same given time frame that I bought JEPI and held it over the last few years, I'm honestly pretty happy with the investment. I more or less thought that this ETF was going to trade mostly sideways with maybe some upside, but to pay around 10% more or less per year in dividends, which again, as of right now, it is under that target of mine. But still, as of right now, I'm going to hold on to my shares of JEPI, but not add any more shares anytime soon here. I do think it's important to mention, though, that there is another JP Morgan income ETF known as JEPQ, which has seen some massive appreciation over the last year. And this is because JEPQ has much more technology within the holding breakdown. And I'm sure what you guys are wondering is, do I have any JEPQ in my portfolio as of right now? And the answer to that would, of course, be yes. I do have a little bit less JEPQ than JEPI, but JEPQ is an ETF that I have been adding here and there. Some more shares to my portfolio, because for one, JEPQ does have a higher trailing 12-month dividend yield by just a tad, but also because of the holding breakdown, when the market starts to move up, because of the higher beta names in here, things like Microsoft, Apple, and overall just the holding breakdown being majority technology, JEPQ has performed much better than JEPI, at least so far throughout a few time frames. So there we have it. Those are the results of me buying and now holding my JEPI ETF for around 3 years now, and exactly my plan moving forward. Like I said, as of right now, I'm still going to hold on to my JEPI shares, and I'm not all that disappointed, especially if we can get some small even dividend increases over the next few months. But for the future, I'm definitely going to be adding some more shares to JEPQ. But now I want to hear from you guys down below when it comes to either JEPI or JEPQ. Do you have either or in your portfolio, and which one of these ETFs are you adding more of as of right now? If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.